Let's look at the NCB APO. What do you make of that opportunity?
So, it's an interesting, take in terms of how NCB Financial Group is looking to, address the debt it would have accumulated in the prior years acquiring Guardian and Clarion. So, we've seen whereby the price has tended close to $65, Jamaican 65 Jamaican dollars, which is the APO price. We've seen that since last Friday. It does not trade at $65 per se. And something I pointed out in our group, was that we know that there is a delay between when an offer is submitted to the regulators versus when it actually is allowed to be published. So you should remember that back at the end of February, going into mid-March, NTB was trading at around 69 Jamaican dollars. So in context, had the APO come at around that time, it would have been effectively trading at a discount, at a relative premium that we're seeing right now as it currently exists right now in its current state. So pretty interesting to see that, not many specific reserve pools. It's just, generally open. The only discount offered is to the NTB staff who've been reserved, I think, is about probably 1% of the overall APO at 50.5 Jamaican dollars, and that's for Jamaican resident NTB financial employees, whether direct or indirect employees. So that, would in turn, mean that Guardian Life, Guardian General Insurance staff, would technically fall under that category of NTB employee reserve pool. But in all honesty, first public ordinary shareholder of the year coming technically at a relative premium based on timing of when this offer comes out. It's what we describe as the first litmus test, because NCBFG was approved for 300 to 450 million ordinary shares back at its October EGM. Their upsize limit in this case is up to 117.5 million shares. So it'll be interesting to see, if they'll get the desired target within the month time frame that they've set, going to May 26, or they will be willing to extend it. The minimum that has to be, subscribed for the offer to be successful is 700 million Jamaican dollars. Why does NCBFG, consider this route? So for those who don't know or are still learning to an extent, NCBFG is actually a company for itself. The numbers we see each quarter are what you'd call consolidated numbers. Those numbers show the economic performance of the group's entire financial subsidiaries, basically. So Guardian Holdings, Clarion, NCBJ, and so forth, minus any intercompany transactions. However, NCB Financial Group is actually a standalone company, and it's for purposes as a holding company, in this case, a licensed financial holding company. It has, I believe, 91 billion Jamaican dollars worth of debt, and it has $36.84 billion due, which would be between October 2023 to September 2024. So its APO is just part of that strategy to, reduce some of that debt load and reduce that interest cost while, giving NCBFG more space to navigate the changing regulatory landscape. So we know that their primary subsidiary, National Commercial Bank Jamaica, it has Basel III as a regulatory change coming up very shortly. We would have also, need to take note of the different changes happening at the securities dealer industry level, and for further context, the potential need to further support some of the other subsidiaries. Not necessarily Guardian Holdings, probably could be Link, probably could be Clarion, we just don't know, but this capital is supposed to help improve the capital space of the overall group. So that's just my couple cents on the whole offer so far.
What do you make of them doing both a bond and an APO at the same time? It's over $1 billion total they're trying to raise.
Over 14 billion actually, Khalil. Well, over 13 billion. So if the offer without being upsized is 5.1 billion. if you upsize it, it's over 7 billion Jamaican dollars, and the bond offer is up to 6 billion Jamaican dollars. So
A billion from, because it's 5 and 5.5. So I meant over 10 billion. Sorry. But, and you
it's
said,
5.5. It's 5.5 to actually 6 billion.
yeah.
That's the offer that closes May 6th, which would be next week Monday. To be honest, I think if the option was available, I think they would have potentially pushed this offer to be published, next week Tuesday, after the bond offer would have been closed. And it's just really the fact that you're talking about two key things. Equity is relatively cheaper in higher interest rate environment. And we're seeing whereby, at the moment, the offer price is coming at above the market price. And also, you're talking about the debt offer, which is going for what, 11.25 for 2 years, 11.75% for 3 years, and 12.5% for 5 years. So you're talking
Yeah,
about a
it's
fixed
pretty
rate.
high. It's pretty high interest.
And think about it for a second, Kalila. If NCB FG is offering those kind of rates, and their type of financial conglomerate they are, what about everybody else in the rest of the space? Think about it for a second. If NCB FG, which has one of the highest characteristic ratings, their subsidiary at the same level as Jamaica, is borrowing debt at these kind of rates, it kind of tells you what the rest of the market actually is. But to be honest, I really and truly, if the option was available for them to, have launched the APO or published after the bond offer was closed, they get a bit more ideal, because with the bond offer, it's $100,000 minimum, which is a pretty low barrier of entry for a general bond. And on the top of that, you're still talking about the fact that persons are going to be looking at the opportunity cost of equity versus debt. So there are different elements to weigh in this whole discussion.
So if you were considering investing in NCB, which one would you go for right now? Reminder, this is not investment advice, but would you go for the bond or would you go for the APO?
I'd probably go for the bond, and it's just really coming down to really the opportunity cost. Right now, even if interest rates starts to decline, relatively speaking, for one, you don't know the level of decline at what pace would occur. So yes, while the opportunity or the case is there that NCB could easily go to $80, $90, and effectively surpass the return of the bond, there's also the case of the fact that we just don't have a viewpoint as to where rates are coming down alongside the general market sentiment, around equities. Because yes, you have like a MJE buying up, equities, but MJE is very different from a pension fund, from other institutional investors, which are looking right now at opportunity cost and capital preservation. And the reality is, while NCB does have that momentum to really have a fast trajectory back to net $90, $100, it is still incumbent on the macroeconomic environment and other factors. And it's just not clear as it is, because where persons were saying by September 2023, rates should come down, by early 2024, rates should come down. Tomorrow we're even seeing the US Federal Reserve, have its monetary policy meeting. So that's just my take.
I agree with you, David. I think in this environment right now, looking at what stock prices are doing, where stock prices are, as somebody mentioned, I don't see NCB going back to 150 in the next 2 years. Meanwhile, you just get your stable, consistent interest from the bond. But it also depends on your price point, on how much money you have to invest, because the bond is 100,000 minimum, whereas investing in the APO, you only need 6,500 to invest in that.
And the thing is, the APO is technically cheaper for certain persons who are purchasing significant volumes. What do I mean by that? So in a usual market offer, like an APO, IPO, the only fee you do pay is the JCSD fee, which in this case is 172.5. If you were to buy, the shares in the market, once you pass a particular threshold, can't calculate it right now, your commission alone is likely going to exceed that $102.50 in fees. And that's just commission before you account for the JSC fee and GCT. So for some investors, this is an opportunity for them to get certain volumes of NCB without paying a certain penalty in higher fees. So whereas the price might be trading at a relative premium to the market price at the moment, for some persons, based on the volumes they're purchasing, that differential between the market price versus the price they're paying alongside the 162.50 versus the total fees they would pay, it can be a massive saving for them, because for certain institutional investors, they're making their advisors do the trades for them, so they're paying 2% commission. So this is also a factor that has to be considered.
So I think you're kind of answering some of the questions from the viewers who have been asking. Where did I put it? Sean, for example, says, I really don't think I want that APO so long as the current price is lower than the APO price. Actually, I think it traded about even today, but up to yesterday, the APO price was higher than the current trading price.
So the Trinidadian conversion price is higher than the APO price as well, but it's traded close to that $63.38. So that was today's closing price, Kalila. And
So
it traded as
closer.
63.97 was today's peak, intraday peak. And it traded as high as 64.50 on Monday and Friday.
64.50. So it's coming closer. And we have a few more days until it actually opens.
Next week, Monday is when it's open. That's May 6th.
Mm-hmm. So Sean says, will the APO curse catch NCB? We have Who Am I, who says, I look at the APO risk reward and the risk appetite is indigestible. Do you agree with that, David? That there's just too much risk in buying into an NCB APO?
It depends on what part of the spectrum you are, because for some investors right now, they're looking at, when they talk about risk appetite, they're also talking about their own personal exposure limits, to certain investments. And for some investors, they will have limits on particular sectors, to any one individual security. So for some persons, while this might be opportunity for others to gain volumes, for others, they probably are at their own limits, personal limits. And it's not necessarily that APOs are bad. One major thing that we keep forgetting is the fact that we're talking about a period where JMB had brought that term from Trinidad to Jamaica, which was September 2019, just for COVID. And it would have been interesting to see how equities would have performed in context of additional liquidity, meaning more shares on the market from APOs, without the backdrop of high inflation, COVID, and high interest rates, all these different factors.
I see some questions here in the chat as well, talking about what's going on in the market right now. As you mentioned, the stock price for NCB has been rising over the past couple of days. We have Who Am I says tomorrow, May 1st, is going to be a very interesting day, as we say, sell in May and go away.
Well, for some persons, they're going to be selling, and that's for some other persons, they're going to be buying. That's just the nature of the market. For someone like me, I sell at month and there are quarter end for certain stocks, and I buy in the month as my target price is achieved. So, for example, got separate at 77.61 last week Tuesday, so at 84.99 today, 9.51% in 1 week before fees. After fees, probably a little bit around 7 point something percent, and you just had a couple of the securities on the market that were trading pretty well, or I should say pretty high, post or close to the market close. We saw where X Fund had a $7.50 sell order that was passed. We saw that there was an $8 bid at the end of the market close. Basically from $3.30 to $3.60. So you did not see that kind of activity at the end of quarter for March, but for end of April, people did make some good little gains.
All right, we have a question on Instagram from Lady Gordon, who says the interest rate on the bond is really high, which seems like they are desperate for funds. Will they be able to make the coupon payments?
So for context, couple of things. We have to remember a couple of things in the sense that while NCB Financial Group would have, the benefit of a high credit rating, which in turn should mean lower borrowing costs, we should also not forget the context that the Bank of Jamaica has their monthly certificate of deposits that are giving 11% yields. So basically what I'm pointing out is if the BOJ is what you'd consider risk-free, and that is before you account for treasury bills from GOJ or other extremely low-risk investments in the fixed income space, then NCBFG has to give a relative spread above some of these lower risk investments to make it attractive for investors to even look at the offer. So probably Julian could add some flavor here, but to just give a layman's perspective, when it comes down to borrowing, you're looking at your own cost of funding if you are, let us say, a bank. But if you're a borrower, and let us say you have an advisor or investment banker that actually looks at the market and says, what can I sell to the market that will get taken up and get my client the money? The good credit rating, it helps, but at the same time, what other alternatives are there? The opportunity cost. I've always mentioned opportunity cost, which is, what if I decide to take a certificate deposit from the BOJ versus the NCB FG bond? That these are the questions that investors have. So if NCB was to have given a 10%, 11% interest rate to the market, you'd probably have investors saying, but I just need $1 million to go to the BOJ for their monthly CDs, and I can compound that money monthly at 11% yields. So you're probably going to see similar cases with other borrowers who might have a floor right now of about 10% for their coupon rate, and the variable rate as it is for some of them probably sees them borrowing or paying interest at 13, 14%. So all of this to say that NCBFG, they do have to refinance this debt that is coming due. It might seem a little, peculiar that NCBFG is paying so much in terms of a high interest rate. But as I pointed out, borrowers have to have something that entices them, that makes it attractive for them based on the risk and also based on the opportunity cost of other investments. Because remember, NCBFG, this is an instrument that is not going to be listed on a market. You're also talking about the fact that whether private or public, you're talking about the fact that this is an instrument that is paying semi-annual coupons, not necessarily quarterly, versus like a BOG or other instruments paying quarterly as well. So there are different factors that will impact the final cost that NCBFG will issue to the market, and also the tenure of those instruments, because the 5-year instrument is giving 12.5%, while the 2 years giving 11.25%. So the tenure also influences the rate that has to be offered to the market to make the bond willing to be considered by investors.
All right, next question comes from Roswell. And by the way, unfortunately, it seems we have to go without Julian tonight. So we won't get that second perspective, David. The next question comes from Roswell. Is it okay that many people are selling down their stocks? Let's see how companies look in 3 years from now. And it wasn't a question. She said, it's okay that many people are selling down their stocks. Let's see how companies look in 3 years from now and the price that they trade at.
Yeah, my comment is just that you have to choose what is best for you, because some persons have the capital and the wherewithal to invest in investments in equities right now. Others have to consider their own personal liquidity needs and their own personal financial situation. You have persons who are looking at right now increased maintenance costs for their strata, increased, security costs and other factors in their personal lives. So while, some persons are going to be like, hey, it's great to be a buyer with high interest rates in equities, if you have the cash coming in at the same pace, he can really take advantage of some of these opportunities. And while some persons would say, hey, I could just borrow money, take a margin loan, your unsecured interest rate right now, you're talking about 21%. Margin loans are going as high as 12, 13% as well. So all of this is just to point out that, yeah, there are opportunities out there, but each person has their own personal situation that they have to address primarily before they look at anything else. Personal finance is personal, which means you, not the world or anybody else.
Mm-hmm. We have an observation here from Christopher. Christopher says Select F seems to be a well kept secret. People in the know are buying heavily. Watch the action on Select F over the next days and weeks. And then he adds, let me find the other comment. He adds, a huge portion of Select F portfolio is made up of NCBFG stock. Hint, hint.
So what they're pointing out is the fact that because NCBFG makes up a larger constituent of the financial index and in turn Sagicor Select funds, what happens is that it's like they're going to participate to maintain that corresponding balancing with respect to the JSE financial index.
How is that? How is Select F doing right now? Because after they launched it, like it just seemed to continuously underperform.
It technically still is underperforming because the IPO would have been at $1.98 for some investors. It's trading at around, I think it's 46 cents.
Oh, wow.
Yeah, 46 cents on the dot. And the NAB is, I think, about probably 50, 60 cents or around that region. And the reality is NCB FG wouldn't have been paying dividends for 2.5, almost 3 years. So it would have been the largest holding. That would have been where they would have gotten most of their expected dividend income. So Selective is, not in best graces, but reality is you just have relatively good concepts that just come at what you call the wrong time. Because Selective came in 2019, COVID came, high inflation came, and high interest rates. So it just, concept was there, but subsequent events just influenced that decline in price.
Mm-hmm. Yeah, Select F was one of those that get licked. Well, thank you so much, David, for your insights this evening. We appreciate it as always so thorough.
You're welcome, Kalila. And take it easy, everybody. Keep invested and keep yourself educated.